Hey everyone, and welcome to this explainer. Today, we're looking at a completely baffling paradox that has recently shocked the global economy. I mean, how does one of the world's greatest energy giants suddenly find itself forced to import fuel? It sounds like an absolute contradiction, right? But that is exactly what the data and recent events are showing us. We are going to unpack the fascinating chain of events that has literally turned an energy superpower upside down. Okay, let's dive right into this. Back in early July, Russian Deputy Prime Minister Alexander Novak delivered what had to be an embarrassing emergency measure to Vladimir Putin over a video conference. He announced an immediate ban on diesel exports and stated that the country would actually have to start importing refined fuels from abroad. For a nation that was until very recently the world's second largest exporter of diesel, this is a massive shock to the system. It perfectly sets up our geopolitical detective story for today. To truly understand the severity of this, we need to ground all this macroeconomics in everyday reality. What's actually happening on the street. In many Russian regions, drivers are waiting hours in line just to get gas. Some stations have imposed strict limits of just 20 liters per customer. The situation has gotten so incredibly tense that police have actually been deployed to break up fights among frustrated drivers. And in places like Crimea, this fuel shortage is directly contributing to rolling electrical blackouts. Section 1, the catalyst, drones versus refineries. So what exactly caused this sudden crisis? Well, Ukraine made a very calculated decision to shift tactics. Instead of just focusing on the front lines, they started directly targeting their opponent's economic engine. By aiming at refineries, fuel depots, and pipelines, they're attempting to choke off the revenue that keeps the whole war effort moving. Now, what's really interesting about this is the reach. We're talking about drone strikes hitting targets up to 2,500 kilometers away from the Ukrainian border. Using these highly sophisticated semi-autonomous drones that can operate without direct human control, they've managed to strike deep into Russian territory. It's a technological feat that would have seemed totally impossible just a few years ago. And this isn't just a one-off lucky strike. It's a relentless cycle. The strategy is incredibly persistent. They basically wait for a damaged facility to be repaired, and then boom, they strike it all over again. As the source material describes it, for Moscow, it's essentially like trying to bail water out of a leaky boat, while someone on the outside is actively drilling new holes into the hull. It is an incredibly difficult situation to keep up with. The impact of this relentless strategy is just massive. A staggering 40% of Russia's refining capacity has reportedly been knocked offline. 40%. When nearly half of your ability to process raw resources is totally neutralized, the economic consequences are going to be immediate and they're going to be severe. Which brings us to exactly how this damage ripples through the broader domestic economy. Moving on to Section 2, the mechanism, the value chain rule. To really grasp the depth of this economic damage, we have to look at how wealth is actually built. Imagine you own an apple orchard. You could just pick the raw apples and sell them exactly as they are. Or if you process them into apple juice, jam, or baked goods, you create entirely new industries. You need specialized equipment, packaging, a whole new workforce. Every single step adds immense value and profit. Well, the exact same rule applies to petroleum. Extracting raw crude is like selling raw apples. Refining it into gasoline, plastics, and fertilizers. That's the apple jam. It's the most profitable part of the entire value chain. Because the drone strikes are specifically targeting the refineries, the jam factories, so to speak, Russia has been forced into a highly inefficient loophole just to meet its own domestic needs. It goes like this. Step 1. Russia sells its raw, unrefined crude oil to India. Step 2. India refines that crude into gasoline at facilities like the Nayara refinery. Step 3. Russia then buys that refined gasoline back. The profound irony here is that the global energy superpower is now paying a premium for someone else to process its very own raw materials. Section 3. The economic short circuit. The impact of this crisis on the refineries goes far, far beyond just the availability of fuel. When the nation's 44 large refineries slow down or stop producing entirely, an entire connected ecosystem of engineers, specialized transport companies, port operators, and massive chemical industries suffers a huge bottleneck. Neutrally reporting on the estimates from the Kiel Institute here, while defense spending is absolutely soaring, actual oil and gas revenues have hit a 5-year low. The Russian economy actually contracted by 0.3% in the first quarter of the year. Plus, the government's own growth forecasts for 2026 have been drastically revised downward to a mere 0.4% expansion. And meanwhile, inflation is sitting at a stubborn 6%, which, to put into perspective, is double the rate currently seen in the Eurozone. This creates an absolutely impossible dilemma. The central bank desperately wants to lower interest rates to provide some much-needed oxygen to struggling domestic businesses. But simultaneously, that 6% inflation rate forces them to keep the cost of borrowing incredibly high. It is essentially like the central bank is trying to extinguish a raging fire with high interest rates, while the government's massive defense spending just keeps throwing fresh wood onto the flames. The two policies are completely at odds. So the crucial point is this concept of structural exhaustion. For years, Moscow built up massive financial reserves, fiscal buffers from its booming oil and gas exports. These buffers initially absorbed a shock of the war and the international sanctions. But now, those accumulated reserves are being rapidly depleted. According to the source data, just in the first 4 months of 2026, the budget deficit reached a staggering $78 billion. Section 4. The new dependency. As we zoom out to the global stage, we can clearly see how this domestic economic weakness has fundamentally altered geopolitical relationships. You likely remember this famous quote. Just days before the large-scale invasion, Vladimir Putin and Xi Jinping announced a partnership without limits. It was confidently framed as this grand alliance of equals taking on the West. But today, after more than 4 years of conflict, the stark, lopsided reality of this growing dependence on China looks very, very different from that initial rhetoric. And this brilliantly illustrates that shift. Before the war, trade with China accounted for about 16% of Russia's foreign commerce. Today, that number has more than doubled, surging to roughly 35%. Now, while finding a willing buyer for your oil might sound like a win, in reality, when you rely on a single major buyer who knows you have literally no other options, well, they hold all the leverage. Because of this, Russia is forced to accept razor-thin profit margins on its energy exports. Furthermore, this growing dependency on China isn't just about finding someone to buy Russian oil. It works the other way too. Russia is now entirely reliant on Beijing for crucial imports, electronic components, industrial equipment, and vital manufacturing parts. Without these essential imports from China, neither the Russian industrial sector nor its military machine could even keep running. Which brings us to a profound historical irony. One of the primary stated goals of the invasion was to secure Russia's strategic independence and push back against external influence. However, the actual result has been the exact opposite. Today, Russia is arguably far more dependent on China than it ever was on Europe before the war began. Finally, Section 5, the true cost. We have to weigh this massive structural economic damage, from drone strikes crippling the refineries to the overall structural exhaustion, against the actual physical results on the ground after more than 4 years of war. Despite transforming into a full-scale war economy and pouring absolutely enormous amounts of money into the military, physical gains have been incredibly slow. Estimates show the average daily advance for Russian forces on the front lines is roughly just 70 meters. Just 70 meters a day. They are still heavily fighting for towns located just a few dozen kilometers from their own border. And beyond the remarkably slow physical progress, almost all of the initial geopolitical objectives have completely backfired, leading to massive unintended outcomes. As we summarize our key takeaways from this explainer, we can see that the conflict has triggered Europe's largest rearmament program since the Cold War. It has resulted in a strengthened, much more unified NATO alliance. And crucially, it has led to a complete loss of Russia's strategic autonomy, replacing it with a heavy reliance on Beijing. Ultimately, it isn't simply a question of whether the country has the technical capability to continue the war. The real question, and the powerful lingering thought the source material leaves us with, is this. With their energy sector taking unprecedented hits, economic buffers rapidly depleting, and strategic independence totally lost, how much more is the country willing to pay to keep fighting? It's a question that will undoubtedly shape the geopolitical landscape for years to come. Thanks for joining me to explore this complex explainer, and keep learning!